Hi everyone, I hope this finds you well. Today is Friday, July 22nd, 2016, and in about 3 minutes I will share with you a brief overview of the market's last quarter, which was Q2, and I will also share an interesting anomaly we are seeing. So despite the unexpected Brexit vote last month, which caused a lot of volatility in the markets, the S&P 500 was up for the second quarter 2.5%. The gains were driven by a continued recovery that we're seeing in the oil market, which drove crude prices up 25% and pushed the energy sector to the top of the S&P sector rankings. Bonds also had a strong quarter as we saw global yields or rates continue to decline. Now, as a reminder, bond prices and yields have an inverse relationship. So when we see yields come down, prices go up. As of the second quarter, the energy sector was the highest returning sector of the S&P 500, up 11.6% year to date, and high yield bonds were the highest returning sector of the bond market, up 5.5% year to date. So for the remaining minute or so, I wanted to share an interesting point that one of my favorite portfolio managers, Bob Dahl, over at Nuveen Asset Management, brought up in one of his recent market commentaries. He pointed out that following the Brexit vote, U.S. Treasury yields plummeted to all-time lows, and that normally low yields are a sign that the economy is weakening. But the underlying economic data does not appear to match what yields are telling us. In fact, the Federal Reserve Bank of New York's recession model is currently forecasting only an 8% chance of recession in the next 12 months. Bob argues that the reason that yields are so low is what he calls global forces. And although he didn't explicitly say this, what I think he means is things like negative yields on bonds in countries outside of the US, which is making our US bonds look pretty attractive, keeping demand for them high, keeping yields low, back to that inverse relationship, which is pushing prices higher. It's certainly an interesting relationship to keep an eye on. I hope these quick market videos are insightful and impactful to you. I hope they give you a good idea of what's going on in the markets and what we're paying attention to. I thank you for taking the time to watch them. And as always, if you have any questions, please feel free to reach out to me. Take care.